Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. First of all, I have to say sorry because my weekly update, which normally come on the weekend for my real money North American portfolio, is a little bit late this week, and so I just come out Monday. And the reason for that is just I was very busy last weekend with the birthday of my daughter. And if you follow me for a while, you know the channel is all for my daughter. And so we had to celebrate not her 15th, but her 14th birthday this weekend. And so I'm a little late with my update for week 8 of 2021. And if you are new to my channel, you should know that you get a weekly update every weekend with an insight to my real money North American portfolio with all the transactions, moves, dividends, and so on. And also a view on my performance, of course. And so I want to do this. I want to do a review for last week, week 8 of 2021. My portfolio looks like this right now. When you look at that, then of course you see this is a lot of boring, stable, profitable companies. No big hype, no big tech. Very, very good, very, very solid companies as I like it as a long-term value investor. And with this portfolio, I outperformed the S&P 500 since the 2nd of December 2019 to the end of last week, I have to say. The performance of 50.26%, and this is an outperformance of around 28% to the S&P 500 over the same time span. And that's great. And if you like this idea and if you want to follow me on my road to financial freedom, then just subscribe to my channel and ring the notification bell to never miss another video. And of course, give me a big thumbs up. And as every week, I want to start with the news of the week. And as always, when Warren Buffett speaks, I want to listen, and therefore I want to look with you into the letter to the shareholder, which came out on Saturday. And this letter, as always, start with the performance of Berkshire versus the S&P 500 over the last decade since 1965. And this is really, really incredible. And overall, when we scroll down, we see Berkshire Hathaway have a big outperformance to the S&P 500. In average, Berkshire have a performance of 20% per year versus 10.2% to the S&P 500, which is still great. But if you compound this difference over a big time span like that, then of course you have a big advantage in the overall gains, and you see this just here. Of course, if you look to smaller time spans like the last decade or so, then the S&P 500 outperformed Berkshire. But if you look over the long term, then Berkshire is just the best. And so when we look deeper into the letter to the shareholders of Berkshire Hathaway, we see that they earned 42.5 billion in 2020 according to generally accepted accounting principles. The four components of the figure are 21.9 billion of operating earnings, 4.9 billion of realized capital gains, a 26.7 billion gain from increase in the amount of net unrealized capital gains that exist in the stocks we hold, and finally an 11 billion loss from a write-down in the value of few subsidiary and affiliate businesses that we own. And if you know Warren Buffett for a while, you know the operating earnings are what really count. And so the 21.9 billion of operating earnings are the most important message in this letter. And also he said that, as I've emphasized many times, Charlie and I view Berkshire holdings of marketable stocks at year-end worth 281 billion as a collection of businesses. And so overall, this letter to the shareholders, I highly recommend. I put a link to the whole letter. It's 14 pages. here down in the description. I highly recommend to read all of that. You can learn out of these letters so much. And so I'm very happy because I'm also shareholder of Berkshire Hathaway. And as I mentioned also in some other videos, I will just buy more and more over time because when you see these operating earnings, then and calculate that to the market valuation right now, then it seems like Berkshire Hathaway is still at least not overvalued, maybe a little bit undervalued. And so for me, it's the best long-term investment, at least if you're happy with a return maybe between 8 and 10% per year over the long term. And so Berkshire Hathaway right now is already one of my bigger positions in my portfolio, and I will build this up over time, a little bit here, a little bit there. And of course, when we get a correction or crash, I will buy a lot more. And with that, take a look at the weekly performance in my portfolio. And the biggest winner in my portfolio last week was MasterCard, and therefore it is the winner of the week with a performance overall of 3.87% in the week from the 22nd of February to the 26th of February. And here on the green dots, like here and here, you see when I bought my shares. And so I'm up overall right now around 40% with this position. And since MasterCard was even not that cheap when I bought it, now it's really overvalued. And so I think about when it's time to sell because we come to a range where it is highly overvalued. And so in my mind, I have a range maybe around 380 or so, where it would be time for me to sell MasterCard. And of course, where's a winner, there's also a loser. And the loser of last week was Electronic Arts. Because Electronic Arts last week lost 5.83%, and they just suffer as a lot of the tech companies last week suffer. But I'm still happy with my investment. Also here you see with the green dots when I bought my shares. And so I'm also up a lot with Electronic Arts, but Electronic Arts is still around the intrinsic value, even a little bit below. And so there is no reason to sell this great company. I will just stick with it and everything is fine. And even when we get a correction or crash, I will add to this great company. And by the way, if you're new to my channel, you find deeper analysis to all of the companies in my portfolio on my channel. I put a link here up on the screen. And also last week I received a little bit of dividend because last week Caterpillar paid the dividend of $12.26, and so a little bit of cash flow also in my portfolio. And last but not least, look at the overall performance of my portfolio since the start at the 2nd of December 2019. And here we see that Caterpillar is the best performer with almost double, 99% up right now. Second, Walt Disney with 93%, followed by JP Morgan and so on. I'm very, very happy with this performance overall. And as I said before, you find deeper analysis to all of these businesses on my channel. And on this channel also, I will look high quality value stocks every week and analyze them, calculate the intrinsic value, and then we'll tell you when it's time to buy in my view. And as I said also, every weekend an update on my real money portfolio. So feel free to check out all my other videos, and of course please subscribe to my channel. This really helps my motivation to keep up this work. And as I said, with this strategy and this portfolio, I outperformed the S&P 500 so far since the start of this portfolio by 28%, which is really massive. And the overall performance of 50% in a little bit over a year is just incredible for me. And so I will just stick with my plan, look for great quality, high value businesses and buy them way under the intrinsic value. This is a way to do it for me. This is not big hype. This is not a lot of bullshit. This is just value investment with a lot of patience, of course. This is what you can expect from this channel and from my investment philosophy. And if you like that, just subscribe and follow me on my road, and you will get all the transparency of all my actions. And with that, thank you for watching. And if you like this video, if you like the whole idea, subscribe. And then we will see the next time with another analysis of another stock. And of course, next weekend, and I promise it will be the weekend, with the review of week 9 of 2021, which started today very, very green. And so my portfolio is up already another 2%, which is just nice. And we will see how this will go on over time. See you then. Take care. Bye bye.